This episode of Startup Central is an Edtech special. And why not? India's most valuable startup, Byju, last valued publicly at $22 billion, has been receiving a lot of flack. Whether it is its losses that ballooned 20x to come in at 4,500 crore rupees for the financial year ending March 2021, to the fact that is it an edtech company or a tablet company that sells its sales agents out there with all kinds of promises to its parents, to now the latest headline being it will be laying off. That is right, Byju will be laying off 5% of its workforce. That's 2,500 employees. 2,500 employees are going to lose their job at Byju. This is going to be in content, this is going to be in tech, this is going to be in product. What's more, Byju is saying it's going to introduce a new sales model, a lower cost model, where it's not going to send the agents out on the streets. Instead, it'll have what it calls inside hubs, where the sales team will be conversing with consumers via email, Zoom, video conferencing. The question we're today also asking is the best behind us when it comes to edtech? Schools have reopened, colleges have reopened, there's a screen fatigue, people want to go out there. So is the edtech party behind us? First up, what is the data looking like? What is the math looking like for Byju as well as edtech at large? Here's my colleague Samit with a detailed report.
Byju has come out with a slew of announcements that will lead to lower cost and help the company turn profitable. Firstly, it's the layoff of 2,500 employees. That's nearly 5% of their total workforce. And this layoff will be across product, content, media and tech. So across the platform, they are doing layoffs. And there are a few other strategies which will help the company achieve or target profitability by the end of this current financial year. So what are those other factors that they're focusing on? Firstly, they will restructure their business and overhaul their sales, and they realign the marketing spends. They're also focusing on more efficient-led growth marketing, and they're also lowering their marketing spends going forward, and they will reinvent their sales model, which will be focusing more on video calls and emails. Along with this, they're also looking to consolidate all the K-12 businesses that they've acquired so far into one unit, which will lead to further integration and cost savings for the company. Now, if you see, since 2020 till now, the fundings have fallen from 1.87, it had increased to nearly 5.82 billion in 2021, and now it has come again back to around just $2 billion so far till August that we have seen the fundings that has come in the edtech ecosystem. Now let's look at the top 4 players that are present in this segment. Firstly, it's Byju, then there's Unacademy, then there is Edtech, and then upGrad. And there are 4 companies that have so far shut down their shop in this system, and those are Lido, Uday, Crejo and Superlearn. Now, if you see the financials of these edtech companies, you can clearly see why the fundings have slowed down and why there's a need to realign their businesses. Firstly, if you see Byju's profitability, it has widened from around 230. The losses have widened from around 230 to around 4,600 crore rupees. Similarly, Unacademy's losses have widened nearly 5 times. And other than physicswala.com business, no other company is profitable at least till FY21. However, not everything's bad in this sector. There are some positive signs that we are seeing. Firstly, the fact that the online education market is expected to be worth around $5 billion by 2025. That is nearly a jump of nearly 4 times as compared to 2021. And since 2025 to 2030, if you see, the growth is expected to be nearly 6 times. And by 2030, this segment is expected to be worth nearly $30 billion US. Also, consolidation is expected to continue in this segment. So far, 24 startups have been acquired by Byju and Unacademy, and the top 4 players, if you see, they have acquired nearly 50 companies since their inception, and this trend is expected to continue in this edtech ecosystem.
So with India's most valuable startup that happens to be in edtech planning to lay off 2,500 employees, weeks after many other edtech firms have also announced massive layoffs, and with funding also coming down, the question we today are asking is the best behind for edtech? Is the edtech party over? What is the future of edtech? And who better than Ronnie Screwvala to get on the channel to discuss the future of edtech? It's always a pleasure talking to you. Always enjoy our candid chats. Ronnie Screwvala, it hasn't even been 24 hours since Byju has said it wants to be profitable by March 2023. And in one of the endeavors to do that, it'll be laying off 5% of its workforce. In recent times, we have seen thousands and thousands being laid off by edtech companies. The fact is, schools have reopened, colleges have reopened. There's a fatigue sitting indoors studying on the screen. Is the best behind us when we talk about edtech?
So let me just answer that in multiple ways, because it's very, very important that we understand that. Overall, EdTech, which is really the digital revolution and the reskilling revolution, is just about starting, not just in India, but around the world. We are all just getting started. Number two, today more than ever, the reskilling revolution is taking place everywhere else. Third, if you look at the economies and where everyone's going and where the market is going in recession and all the other overhangs, today, for the first time, you're seeing employment being acyclical and going in the opposite direction. Even the US, that is going closer to a recession and has had the most challenges there, they've actually found that unemployment has not dropped. So that's the third part. The fourth, but very important, is, and I know media kind of clubs EdTech with everything to do with K-12 and always talks about schools and EdTech with K-12. Basically, there's higher education, which is really for the largest age group of everyone between the age group of 18 to 68, and then there's the K-12. So is the K-12 sector going through a rough patch? That's a question mark. Because what's the rough patch? When companies have raised money at almost zero cost of capital, it's very easy to build companies and business models at zero cost of capital. You just raise money, there's FOMO, you present a certain way in which your renewal rates and your business and your revenues is growing. Doesn't matter if it doesn't work out, then you blame it on the auditors for rationalizing accounting policies. So, and there's a FOMO. Second, yes, no question, during COVID, kids, not adults, not working professionals, did have a hockey stick in terms of participation. So long and short, a direct answer, we are just getting started, not just in India, but around the world in overall EdTech. Higher education has been stable right through. Some overfunded and zero cost of capital companies are naturally finding their own water. Not that that'll be the end of the day. That's not doomsday. They needed to do that because they were in a very elongated honeymoon period, and therefore they need to find their own balance. But they will. They're solid businesses and they'll grow.
Okay, so there's a lot that you have said that, so I will take it all one by one. So if when you say that there is a question mark over K-12, and I want to caveat here and tell all of our viewers that upGrad is not in that business. upGrad is more about you have to stay educated all your life, you have to constantly upskill yourselves. Their consumer base is 18-year-olds plus all the way till 68, 78, 88, however long they want to. But for the K-12 segment, Ronnie Screwvala, is the best behind us at least for that segment, or is it a model that may need to evolve? And that's what edtech companies, whether they're overfunded or underfunded, need to pivot towards.
No, I hope this is not the end, but still the beginning, even in K-12. The only reason why you're having this major crossroad today, which 18 months from now people will laugh at and forget about totally, is, as I said, highly funded, zero cost of capital raising approach to spending, when your entire mandate from your shareholders is grow, 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 build, you will hire. Now, you hire in good times and then you suddenly feel you've overhired because diversification takes place. So I still believe there's incredible amount of work to be done in K-12. Education per se is going through a massive transition. It'll be very sad if there is not enough disruption happening in the K-12 sector, because there hasn't been one for 100 years. So it's very overdue for it to happen.
What about the other point that you raised? Higher education, edtech being used also to reskill as well as upskill. Talk to us about your experience. Are your numbers growing? You have been, of course, very, very clear that you're going to be a snow leopard this winter season.
Yeah, I mean, I think snow leopard is only because the private equity funds gave it that, gave winter a sort of a new definition. And I do want to state, even for the companies that you're talking about in the K-12 sector, what disturbs me personally the most is where are the early investors? Where are the investors? Why are they not speaking up in favor of those companies? At the end of the day, they are the investors. They went into it and invested with their eyes open. They should be now supporting those companies at this point in time because they know they're in it for the long run. But they've gone completely quiet. And that, to me, is a very strong message to founders and entrepreneurs around the world, and especially in emerging markets in India. You've got to be able to be selective and pick what you're talking about when you come to your investors, because they can easily be very fair weather friends. So that warning not aside, the higher education space is open with opportunities. There's the entire element of undergraduation. 50 to 60% of the people haven't done undergraduation. They've actually gotten into their jobs right away. Second, a lot of people, especially girls, were not allowed to choose a city of their choice and a university of their choice. Digital education has changed that substantially. Second, I have found today that in the working professional class, less and less people are acutely figured out or pointed towards looking at saying, I need a degree to top myself up. More and more, the tectonic shift in higher education is happening where people are saying, make me job ready. I want to be job ready and show me the way to do that. And I think that's changing the entire approach. We use the word skilling. I'm a little hesitant because skilling is a little bit of a down market connotation. It was always meant like, oh, I'm getting skilled upwards. But actually today, reskilling is really meaning that if you're a generalist, you can become a specialist. You can actually get a doctorate online. So for us, between undergraduation, topping up yourself at campus, short courses, boot camps, degrees, diplomas, job-ready programs, all of that comes under higher education.
You have made such a pertinent point over here that, you know, private equity investors, venture capital firms may be actually your fair weather friends. Why are they quiet now? What were they doing the last 1 year, 2 years? Mr. Screwvala, how are you selective? You know, because you've been around for a long time, you've been so successful, and this could be something the young founders could learn from you, even outside of the edtech sector.
I don't think it's about being selective. I think it's about being able to, because look, at the end of the day, you're not going to be able to be totally picky about what you want to do. It's the relationship and the respect and the trust that you find with people. But I'm saying for the same people who say there's a winter going on, they should be supporting the companies there are. Whatever happened necessarily with this one company that may have had delayed audited accounts, let's be very clear, that's part of their learning process. They themselves have admitted that. But it's a private affair. It's not a public listed company. Nobody's let down, you know. So why is there such a hoopla around it? And that hoopla would have died if they're early investors. The same investors who did high secondary, the partners have taken away lots of bonuses. They've actually encashed a lot of them. They attracted and got other investors at a much higher value. I would have thought they would have had to speak up, because if they spoke up, the media would then have a balanced view. If the media would have a balanced view, you wouldn't be asking me the question, is K-12 under threat? Is the best behind us?
So if this is just the start of a digital revolution, and after 2.5 very long years, our children are going back to schools and colleges, what, according to you, will be the future of K-12? Is it going to be tuition, supplementary education, or is it actually going to be connected to government schools, private schools, public schools, to make sure that we actually spread the net of education and have a much higher penetration?
So personally, I don't see the hoopla and the hype around K-12 to the level it is, because it's a substantially regulated part of the sector and will always remain so. Education, which is the calendared event of going to school and going to college, will mostly be regulated in most countries and is for not-for-profit, as it should be. So when you're looking at that sector, which is substantially for not-for-profit, the fact that you're raising a couple of $1 billion in itself has its own negative connotations. But I think augmented learning, like all of us that can afford it, have had augmented learning through tuitions. Today, more than ever, if you want to be an entrepreneurial country, for example, you need to start learning soft skills. You need to have augmented learning. You need to have your tuitions. You need to do many other aspects at that school life and start at a very early stage. It's a little bit like sport. Why are we still not such a sporting nation? Because we don't start that young, and we don't believe in our heart of hearts that our kids will have a career in sports that will be respectful. Every other country in the world has that. That's a mindset shift that needs to happen. So in K-12, personally, I don't see the hoopla for it to be multi-billion-dollar businesses, but there is scope. And I think in K-12, we will need to be blended. It'll have to be a mix of offline and online, which very quickly some of the only online companies are realizing today.
Yes, we've of course seen the emergence of the hybrid model, but like you earlier in the interview said, we haven't had disruption in K-12 for hundreds of years. So let's see that actually take place. Now, Mr. Screwvala, whether there is a winter season or there's a drought and our starters become cockroaches or they don't become cockroaches, the fact is, if you were to just observe and the data that's out there, the interest that's coming in because of the larger macros in India and globally, there are obviously fewer dollars that are being committed to Edtech at the moment. Where do you see this sector headed? Is there going to be a lot of consolidation in your view?
I personally think specifically in India and in Asia, for a lot of Edtech companies, my advice would be you don't need that kind of capital. You've been incensed and intoxicated because other companies at zero cost of capital raised it and blew it up. Let's face it, the same company blew up $300 million buying an asset, burned another $6 million, and it's $900 million down the drain. Personally, down the drain, as how I would define it. But when you raise 4 billion, 5 billion, you can write that off very cushioningly. Who has that comfort? That's why I call it zero capital. So today, you can build something substantial without too much of capital because it's a high impact sector. It's a sector where people will pay you, especially in higher education. The problem with K-12 is that the ARPUs are low. But the key challenge when you get to college, when you get to your working professional life, young, medium, and whatever else, you're willing to pay a much higher price. And I think that's really where it's all headed. Globally, I think we're in for a massive, massive 20, 30-year growth because actually, other than what people call about global supply, the reskilling requirement, because there's going to be changes in the jobs. Most people said technology comes, there's going to be losses in jobs. Now there's a new context that it may not be losses, it'll be substitution. 20% of the jobs will become redundant, but the 80% of the jobs will have a higher value, a higher salary value. Now, where and how is that going to happen? Because that's not what you got taught in school and college. It's going to happen when you go back to learning. And the only way you're going to go back to learning is you can do it digitally.
So that could be the future and the way it's going to go ahead. And Mr. Screwvala, the other question I want to ask you, and you've been absolutely right about this. You're calling it zero capital, cost capital raising, where throwing money down, whether it's acquisitions. And also, let's not forget, many of these Edtech companies have also sponsored IPL teams, right? We've also seen sponsorship, massive marketing spends in cricket as well. Now, having said that, there was a notion last year that India could rule Edtech globally because of some of the moves China had made towards Edtech. Do you think that's still possible?
I'm very, very bullish that from India can be pretty much in Edtech an absolute capital for multiple reasons. With a very strong domestic market. Second, when we talk about spending and ARPU, people will spend less on content, will want to be the cheapest telecom nation in the world. But when it comes to education and job enhancement, people will spend. And third, we have incredible faculty and teachers. We just need to structure this in a manner in which we can export that around the world. And the digital medium will allow teachers, professors to be from everywhere. So you and me can actually become teaching. All of us want to be teachers, but we want to go and give a guest lecture. Now you don't, because the digital medium can make you a specialist on journalism, me on entrepreneurship, somebody else on marketing, and so on and so forth.
Okay, so after talking to you, I'm also thinking that yes, everything is not as bad as is being made out to be. Did you at upGrad have to lay off employees? Are you in hiring mode?
I think the word layoff has a connotation. Let's be very clear. There'll always be attrition, then there'll be performance evaluation. And then if you've actually expanded way beyond your scope, which only normally comes when you have low cost of capital, that's when the layoffs really happen. So I think from where we're sitting, actually, we've raised the least amount of capital in the business, and I don't see that as a criteria under any circumstances. But I think layoffs today is really because, I'll say it again, just zero cost of capital raising, and therefore blatant approach to saying, let's spray and play. Not play, not pray, but play.
But what about redundancies that are created? Like we talk about Byju, it went on a massive M&A shopping spree. Look at the number of companies it acquired. One of the reasons it also said its results were delayed. Now it's saying that there is overlap, there is redundancy. Therefore, it has no choice but to let go of staff.
Yeah, I don't have a particular point on the company you mentioned because I don't have a case point in that. So I would never comment on something which I don't have an in-depth view on. And look, all I can say is I'm very supportive and complimentary to entrepreneurs because I know how difficult it is to actually form, run, grow an organization point of view. I think the redundancy today would be more when we get to sales, right? Because people have looked at this as push selling, whereas actually learning and education is a pull selling. You can't go out there and tell somebody, here, my God, go out there and take this product. It is a collaborative effort and it needs to be done in a collaborative manner. So I think the correction that everyone's facing there is that from the dizzy heights, the road to raising money is a very tricky road, right? Because what you're committing to is growth, even when you can't get that growth. So then what do? You put yourself on steroids. What do you do when you get off steroids? You get withdrawal symptoms. So as far as I'm concerned, these are the withdrawal symptoms that are happening. The layoffs are, unfortunately for the employees, withdrawal symptoms of founders and management who actually took steroids, not really understanding the side implications of steroids. It's like my analogy of the
Are you in hiring mode?
The white leopard, like the white leopard of the prowl. So I'm giving you a new analogy this time.
Yes, you are. And I can see that maybe he was busy with a little bit of sports because last time was snow leopards. This time, a couple of times, you've done analogies with sports and now with steroids. So I don't know if you were watching some game or something. But can I ask you my final question? Because you are such a bull. You're growing. Your numbers have shown that as well. And some also asking for a lot of people today who might be disillusioned, who are losing their jobs. We don't know the 2,500 employees who will lose their jobs at Byju, at other startups. Any advice that you have for many of these youngsters out there? Because this is going to be across sectors.
It's difficult because at this moment in time, you're facing a little bit of a crisis. But to all of them, I would definitely state that you were anyway in a transitionary job. The jobs that you were in, whether it was in sales, is something which had been transitional. These companies go through almost 100% attrition a year, which means every 1 to 1.5 years, the entire sales force or the entire force changes. So it's been a transition period. Treat it as a learning and take that forward. In the interim period, learn from it. Today, I think everyone looks at every 6 months to 1 year, they must get a promotion, they must get a designation change. And if they don't get it, they'll move jobs. Actually, you're degrowing by doing that. You're not growing in your career by getting a promotion every time, because in 4 years, it's going to catch up.
So don't just jump if you don't get a promotion. Don't just jump if you don't get that 40% jump. Ronnie Screwvala, I don't know about you, but one sometimes feels that today's Gen Zs don't hang on in a job for more than a few months, maximum 18 months.
Sure, but I think they also know how to live life. I found them very sensitive to giving back, to understanding many other sensitivities. So I'm pretty excited about working with Gen Z, Gen X, Gen whatever.
It's always great talking to you. I want to thank you for taking the time out. So it's not all gloom and doom. There you have it. Ronnie Screwvala convinced India can be the global capital for Edtech. Just look at our rates, look at the telecommunication rates, look at the sheer talents that we have. Founders need to get off their steroids and find a new balance.
Thank you.